Let's start with case study 1, which focus on an individual taxpayer. Encik Ahmad Ali has employment income of RM95,000 plus RM5,500 in benefit income, giving him a gross income of RM100,500. He is entitled to total relief of RM30,000, which include EPF restricted to RM4,000 and life insurance restricted to RM3,000, master degree education fees, personal relief, spouse relief, and RM2,000 each for his 2 children aged 8 and 5. After relief, his chargeable income is RM70,500. Based on this, it falls under category F, where the first RM70,000 is taxed at RM3,700 and the remaining RM500 is taxed at 19%, which is RM95, giving a total tax payable of RM3,795. After a RM400 self-rebate, the final tax payable is RM3,395. Moving on to zakat in income and goal calculation. Firstly, the total employment income amount to RM95,000. From this, the EPF contribution of RM10,440 is deducted, resulting in a net income of RM84,560. In addition, 18,000 from gold jewellery are included. This brings the total zakatable amount to RM102,560. Applying the zakat rate of 2.5%, the zakat payable is RM2,564.
Now, let's explore how zakat payment can be claimed as a rebate against tax. First, we look at the total tax before rebate, which is RM3,395. And then, we subtract the zakat amount that has been paid, which is RM2,564. That gives the final tax payable amounted to RM831. This shows how zakat can directly reduce the amount of income tax. Next, we move to the strategies for future tax efficiency. One way to improve tax efficiency is integrating zakat planning with general tax management. For Muslims, paying zakat not only fulfill a religious duty, but also give a direct tax rebates. There are 2 ways of calculating zakat on salary, which are monthly or annually. The majority choose to pay zakat monthly, just like income tax deduction, because it is easier and less of burden. But to enjoy the rebate, zakat must be paid through the official state zakat center, and receipt must be kept as proof when filing taxes. Another way is by maximizing available tax relief. For example, EPF members can optimize tax relief by prudently managing contribution and insurance premium. They can claim up to RM7,000, which include RM4,000 for EPF contributions and RM3,000 for life insurance. In addition, individuals can claim up to RM2,500 under lifestyle tax relief for expenses such as book, computers, smartphones, and internet subscription. But starting from 2024, sport equipment and gym fees are no longer included under lifestyle, but can instead be claimed separately under sport equipment and activities up to RM1,000.
Lastly, individuals should consider investing in private retirement scheme. This is because Malaysians cannot afford to retire by focusing solely on their employee provident fund saving. According to EPF, 68% of individuals aged 54 have less than RM50,000 in their account, which may only last 4.5 years, leading many to delay retirement or seek other income sources. In this regard, private retirement scheme has been introduced to boost retirement saving and income. It offers flexibility, a wide range of investment funds with risk preferences, and tax relief of up to RM3,000 per year, which make it a tax-efficient option. Moreover, employers are also encouraged to contribute to the private retirement scheme on behalf of employees to strengthen retirement saving. Thus, with rising inflation, early private retirement scheme planning is crucial for future financial security.
Next, we will continue with the case study 2, which is the Eco-Fresh Agro Partnership. To begin, the calculation of the adjusted income of Eco-Fresh Agro Partnership start with the annual gross income of RM420,000. After deducting business expenses of RM210,000, the partnership recorded an adjusted income of RM210,000. From this amount, capital allowance of RM25,000 were then deducted, resulting in a financial statutory income of RM185,000.
Now, profit between partners need to be computed. For Aisha, the profit from the statutory income is multiplied by her 60% shares, which amounts to RM111,000. For Jason, his share is 48%, giving him a statutory income of RM74,000. Next, for the partner's tax liability, starting with Aisyah, her total income is RM111,000. After deducting the personal relief of RM9,000, her chargeable income is RM102,000. The tax computation on the first RM100,000 is RM9,400. On the remaining RM2,000, it is taxed at 25%. The amount is RM500. Adding both give a total tax liability of RM9,900. Since Aisyah has paid zakat, she is entitled to a rebate of 2.5%, which equals to RM2,775. After deducting this rebate, her final tax liability is RM7,125.
Continuing with Jason Tan, his total income amount to RM74,000. After deducting the personal relief of RM9,000, the chargeable income is reduced to RM65,000. And for the tax computation is as follow. As we can see, on the first RM15,000, the tax rate is RM1,500. The remaining of RM15,000 will be taxed at 11%, which contribute to an additional RM1,650. In total, Jason's tax liability amounts to RM3,150. Next, to determine the business zakat payable by Aisyah, her share of business income, which amount to RM111,000, is considered. By applying the prescribed zakat rate of 2.5%, the business zakat is calculated at RM2,775.
In Malaysia, the government supports agriculture through some incentive, which are tax exemption, financial aid, and institutional support. Firstly, under the Pioneer Status Incentive, agriculture companies get up to 5 years of income tax exemption. The exempt profits can also be paid as dividend without further tax, which is known as a double exemption and attracts investors. Secondly, farmers receive financial incentive such as increased ploughing incentive from RM100 to RM160 per hectare and a new RM50 per hectare harvesting incentive. This directly reduce farming costs and improve profitability. Lastly, agencies like MARDI and Pharma provide supports. MARDI develop higher yield crops through R&D, while Pharma helps in marketing, for example, through Agro Bazaar online, linking producers to consumers, which helps improve their sales and access to fresh products.
Continuing with that, for the zakat arrangement, there are few arrangements that could be applied. But before that, zakat is divided into two types, which are agricultural zakat on harvest and also business zakat on net profit. Since Eco Fresh Agro is a partnership and zakat is based on Aisyah's share of profit, the applicable type to be used is business zakat. Therefore, the most effective zakat arrangement for Aisyah is to pay her zakat directly to the State Zakat Authority, which is the State Zakat Board. This can ensure that what she donates is recognized by religious and tax purposes. To simplify the entire process, she can make a lump sum payment at the end of the partnership financial period or implement a repayment system by setting aside a certain amount each month or quarter. Other than that, EcoFresh Agro may additionally consider open a zakat reserve account in order to keep up accountability and equity between the partners. It can also help to properly differentiate Aisyah's zakat responsibilities from the company's fund. This can strengthen the accuracy of financial reporting, facilitate consistent record maintenance, and offers a clear evidence.
For case study 3, we will look into the company taxation and zakat of Teknova Sdn Bhd. To begin, in order to calculate the statutory income, we first determine the adjusted income. This is done by deducting the operating expenses from the annual revenue resulting in RM600,000. Next, we deduct the capital allowances that resulted in the statutory income of RM550,000. From there, to arrive at the chargeable income, we need to deduct all applicable tax relief. Since Teknova qualify as a green technology service provider, the company is entitled to a 70% income tax exemption for 5 years. This is calculated by taking the statutory income of RM550,000 and multiplying it by the 70%, which equal to RM385,000 exempted. Finally, after applying the exemption, the company's chargeable income stands at RM165,000.
Furthermore, to calculate the tax payable for Technova, we calculated based on the taxable income. The first RM150,000 is taxed at the 50% and the remaining of RM50,000 is taxed at the 70%, give us a total of RM25,050. From this amount, we then deduct the zakat rebate of RM50,000, which bring the final tax payable to RM10,050. In other words, Technova is required to pay RM10,050 in tax based on its taxable income of RM165,000.
So, for the Technova's Rambahat zakat payable, since the zakat pay under the business income for this company is equal to RM600,000, so we calculate time with 2.5% and get zakat payable with RM50,000.
Okay, now we move on to the strategy for optimizing tax and zakat while maintaining ESG goals. Firstly, the company should conduct regular review of its tax policy, ideally for every 3 months. This allows them to identify any error early and make timely adjustment if certain strategies are not aligned with ESG objective. By doing so, the company can maximize available tax benefit while optimizing its business zakat payment. Due to that, the company can hire third-party audit to review the policy rather than relying solely on advanced technology to strengthen transparency and trust.
Next, advanced analytics is transforming how companies manage tax and zakat compliance. By integrating ESG metrics like carbon reduction, renewable energy adoption, and community investment into tax planning, business can identify projects eligible for incentive, such as Malaysia Green Investment Tax Allowance and Green Income Tax Exemption. At the same time, analytics ensures zakat assets are assessed accurately and contributions are distributed transparently, building trust with regulators and the public. Globally, ESG is becoming central to tax compliance as government push for responsible and sustainable practice. In short, tax and zakat are no longer just obligations. They are opportunities to achieve financial efficiency while strengthening environmental and social impact. And lastly, Malaysian Green Investment Tax Allowance and Green Income Tax Exemption are key incentives to encourage investment in renewable technologies such as solar power, battery storage, green hydrogen and EV charging station. Currently, only 11% of companies in this scheme are from the energy sector, but with renewable energy capacity projected to grow from 10.56 gigawatts in 2025 to 13.13 gigawatts in 2030. The opportunities are expanding quickly. For business, this incentive offer more than tax saving. They also open door to grant, carbon credit and the chance to support Malaysia's sustainability goals. By aligning tax and zakat strategy with ESG principle, companies can improve efficiency, build trust and create lasting social and environmental impact.